So now let's move on to your next topic, that is cost of redeemable preference share under the topic cost of preferred or preference share capital. Now here it says redeemable preference shares are issued which can be redeemed or cancelled on maturity date. Okay, these shares are basically those shares which can be redeemed or it can be cancelled on the date of maturity. The cost of redeemable preference share can be calculated by using the following formula. This is the particular formula through which you can calculate the redeemable preference share. Okay, KP is equal to PD plus 1 by N into MV minus NP. Okay, the whole divided by 1 by 2 into MV plus NP. Now what is KP? As we looked into the previous problems also, KP is the cost of redeemable preference share. MV here is the maturity value or the redeemable value. PD is the preference dividend. NP is net proceeds, and N is the number of years. Okay, N is the number of years to redemption. Now, look into your illustration 19. It says a company issues 20,000 10% redeemable preference shares of rupees 100 each. Redeemable after 10 years at a premium of 5%. The cost of issue is rupees 2 per share. Calculate the cost of redeemable preference share capital. Okay, as you all are aware, look at the formula. KP is equal to PD plus 1 by N into MV minus NP. The whole divided by 1 by 2 into MV plus NP. Okay, let's move on to the solution. Let's take down the formula. KP is equal to PD plus 1 by N into MV minus NP, the whole divided by 1 by 2 into MV plus NP. Okay, so it says company is issuing 20,000. Earlier also we've solved this problem. Now let's calculate PD. Okay, it says 20,000 shares into 100 each. PD is your preference dividend. 20,000 shares into 100 each. 20,000 into 100 each, that is 20 lakhs. Okay, what is the preference percentage that is given? It is given as 10%. Okay, which will be 2 lakhs. Okay, now next you have to calculate, after calculating PD, you will have to calculate MV. MV is nothing but your maturity value. Okay, in your maturity value, it says again 20,000 into 100. 20,000 into 100 will give you 20 lakhs. Okay, 20 lakhs. Now in your maturity value, it says premium of 10 years at a premium of 5%. Now 20 lakhs into 5%. Okay, 20 lakh into 5% will give you 1 lakh. Okay, will give you 1 lakh. 20 lakh into 5% will give you 1 lakh. Now how do you calculate maturity value? After you've calculated the percentage and after you've multiplied and calculated and after you've calculated the percentage, all you have to do is 20 lakhs, okay, plus 1 lakh is equal to 21 lakhs is your maturity value. Next you have to calculate your net proceeds. Okay, next you will have to, just a minute girls. Next you will have to calculate your net proceeds. Okay, now in your net proceeds, again all you have to do is NP is equal to 20,000 into 100, that is 20 lakhs, right? 20 lakhs. Now what is the cost that is given to you? It is given as 2 per share. Cost, okay, take the cost, 20,000 into 2, that will give you 40,000. Okay, and check if anything is given, anything else is given. Nothing is given to you, right? Now your net proceed is nothing but 20 lakhs minus 40,000. Okay, 20 lakh minus 40,000 will give you 19 lakh 60,000. Okay, 19 lakh 60,000. Now what is N? Now next what do you have to see? You got PD, you got MV, you got NP. Okay, there's nothing else you have to find out. Now what is N? N is already given to you in the question, that is 10 years. N is 10 years. Okay, now let's substitute this in the formula. KP is equal to, what is PD? We found out it is 2 lakhs. Okay, it is 2 lakhs plus 1 by 10 plus 1 by 10 into what is MV we found out? It is 21 lakhs. Okay, it is 21 lakhs minus what is NP? NP is 19 lakh 60,000. The whole equation divided by 1 by 2 into what is MV? MV is 21 lakhs plus NP, that is 19 lakh 60,000. Okay, now 2 lakh. Okay, let's substitute this. That is 21 lakh minus 19 lakh 60,000. That will give you 1 lakh 40,000. Okay, 1 lakh 40,000. The whole, that is 21 lakh plus 19 lakh 60,000 will give you 4060,000. Half into 1 divided by 2 will give you 20. Okay, we've solved this part. Now let's solve this part. Okay, this part will give you 2 lakh plus 1 by 10 into 1 lakh 40,000. Okay, divided by 4060,000 into 1 by 2 will give you 2030,000. Okay, similarly let's solve this part. Now after you solve the below part, all you have to do is 2 lakh plus 1 lakh 40 into 1 divided by 10. That will give you 14,000. Okay, divided the whole equation divided by 2030,000. 2 lakh plus 14,000 is 2 lakh 14,000 divided by 2030,000. Okay, 2030,000 will give you 0.1054. Okay, it will give you 0.1054, or into 100 will give you 10.542. Okay, is it clear to you all? This is how you calculate for redeemable preference share. Okay, I hope the previous problem is very clear to you all by now. Now let's move on to your next topic, that is cost of debt capital. Now in your cost of debt capital, it says cost of debt is the rate of return. Okay, it is nothing but it is the rate of return which is expected by the lenders, the people who are lending money. It is nothing but it is the rate of return that is expected by lenders. Now before tax, the cost of debt is equal to the rate of interest. Okay, before the tax amount is included, the cost of debt is equal to the rate of interest which is payable on debt. But for calculating real cost of debt, it is necessary to consider not only contractual cost but also imputed cost. Okay, it says while you have to calculate the cost of debt, it is not only that you have to take into consideration the contractual cost, but also you have to take the imputed cost. Okay, now let's look into the formula. It says the formula to calculate cost of debt capital is KD is equal to 1 divided by I divided by P. Now what is I? I is always known as interest and P is always the principal, as you all are aware. You've been studying this earlier also. Okay, now let's move on to the illustration. Okay, now in your illustration 10, it says a company issues 5 lakh 8% debentures at par. What is the cost of debt? Now what is the formula? KD is equal to I divided by P. What is I? I is, wait, let me just work it out for you all so that you get an idea. What is the formula? KD is equal to I divided by P, right? Now what is the interest? What is the interest that is given? That is 8%. Now what is the principal? Principal is given as 5 lakhs. Okay, now principal is given as 5 lakhs, and what is interest? Interest is 8%, right? So on this 5 lakhs, you will take 5 lakh into 8% will give you 40,000, right? 5 lakh, okay, 5 lakh into 8% will give you 40,000. Now I is, what did we say? I was now we found out I was not given to us, only the interest percentage that was given to us, right? It was not given the amount. Now 40,000, substitute in the formula, KD is equal to 40,000 divided by 5 lakhs will give you 40,000 divided by 5 lakhs will give you 0.08, or into 100 will give you 8%. Okay, will give you 8%. This is how simple this particular problem is. Solution to this particular problem is. Okay, now similarly, let's look into the next thing. That is, it says, now you have to, earlier we calculated only cost of debt capital. When they ask you to calculate cost of debt capital, this is how you need to calculate. Now next your topic is you're calculating cost of irredeemable debt. Okay, now how will we calculate irredeemable debt? It says a company may issue irredeemable debentures or bonds in order to retain constant debt in its capital structure. It is also called as perpetual debt. Okay, it is very important, girls. This can be asked for 2 marks in your exam. Okay, it is basically irredeemable debentures or bonds is basically to retain. They are retaining the constant debt in its capital structure. It is known as a perpetual debt. Now, if you have to calculate the if you have to calculate debt before tax, this is the formula. That is, KD is equal to I divided by P. Okay. Now, how will you calculate the thing before tax? Now, what is it saying? A company issues 1 lakh 10%. Now, you should be able to calculate this already in your mind. Okay, you should be very familiar with the problems now. You should be very familiar with the formulas also. A company issues 1 lakh 10% debenture at par. Find out the cost of debt. What is it saying? Now what is given to you? Principal amount is given to you and interest percentage is given. Interest, the thing is not given. Amount is not given. So what will you do? 1 lakh into 10%, that is 10,000 will be your interest amount, right? So now substitute this in a formula, that is I divided by P. Now what is the interest? Interest, I will calculate it here only for you. 1 lakh into 10% will give you 10,000. So 10,000 divided by 1 lakh is equal to 0.1, or 0.1 into 100 will give you 10%. Okay. Similarly, let's look into your next illustration. It says a company issues rupees 10 lakh 10% debenture at a discount of 5%. Find out the cost of debt. Okay. Now what is I which is given? It is given as 10 lakhs. Now here the only thing that is different is discount. What did I tell you earlier? Whenever you have discount, you need to deduct that particular amount, right? So now we will work out this particular problem so that it is, you do not have any further confusions regarding it. Now, what is the formula for this? It is the same. Okay, it remains the same. It is KD, okay, this is illustration 12, is equal to I divided by P. Now what is P, which is a P is already given to you, that is 10 lakhs. Okay, now interest is already given, that is 10%. Now on this particular 10 lakh, you need to, if you have to calculate interest, that is nothing but 10%. 10 lakh into 10% will give you 1 lakh. 10 lakh, okay, into 10% will give you 1 lakh. Okay, this is interest. We found out interest, we got the principal. Now what is it saying? It is saying that discount of 10%. Now how will you calculate discount? Discount is equal to 5%, right? 10 lakhs. Take the principal amount, okay? 10 lakhs into 5%. Okay? 10 lakh into 5% will give you 50,000. Okay, 50,000. Now you need to find out the principal because the discount is given to you. Now you will have to calculate how you have to find out the principal. Now you have to, how will you calculate interest? Now you found out interest, that is 1 lakh, right? Now how will you calculate principal? Principal is nothing but it is, okay, now let's calculate the principal. Principal is nothing but we found out the principal was given as 10 lakhs, right? 10 lakh, okay, principal was given as 10 lakhs minus what was the discount? It was given as 50,000. Okay, 10 lakh minus 50 will give you 9,50,000. Now substitute this particular thing into a formula. Now here either you can take it as net proceeds because your discount is given to you, or you can take it as principal only. Okay, no difference, but it's better if you write down as net proceeds when you're getting the discount amount, because here you have to recalculate the principal, because here principal, that is you have to take 5% and deduct. That is why it will become net proceeds. So slight change in the formula, girls, please don't mind. Okay, it is KD is equal to I divided by NP. Okay, because you have to calculate the principal again. So if you substitute this into a formula, we already found out what is interest. It is nothing but 1 lakh. Okay, that is 10 lakh into 10%, 1 lakh divided by 9,50,000. Okay, that is 1 lakh divided by 9,50,000 will give you 0.105, or into 100 will give you 10.53. Okay, 10.53 is the answer. This is how you calculate it. Okay, now similarly it also says, let's move on to the next illustration. Now here it is before tax. Okay, now after tax the formula is KDA is equal to I divided by NP into 1 minus T. Okay, in brackets. Now what is KDA? Cost of debt after tax. Okay, this is only if they are mentioning after tax. Okay, the tax rate in the question they will clearly mention how you need to calculate, whether it is only cost of debt or whether it is through discount that you have to calculate the net proceed, or you have to calculate after tax cost of debt. Okay, now what is the formula? We saw the formula. Now let's look into the thing. Now I is the interest, N is the net proceeds. Okay, now let's move on to the illustration. Now in your illustration it says, in the cost of in case of the cost of debt formula. Okay, see, earlier we saw in the case the debt is raised at premium or discount, formula may be changed. Okay, formula is changed to net proceeds. Now illustration 13. A company issues rupees 50,000 8% debentures at par. The tax rate applicable is 50%. Compute the cost of debt capital. Okay, let's look into the formula. Now the formula for debt capital after tax, because tax is clearly mentioned in the question, so we have to take this particular formula. That is illustration 13. Okay, KDA is equal to I divided by NP into 1 minus T. Okay, T is nothing but the tax. Now what is I which is given to you? I is here is, okay, the I here is 8%. Okay, 8%. Here amount is not given. So how do we find out? That is 50,000 is given to us, into 8% will be 4,000. Okay. Now next is your your net proceeds. Net proceeds, we will consider this as net proceeds because you have the tax rate applicable. If not, we would have taken it as a principal amount. Now your net proceed here in the formula also it is net proceeds, so we will take it as net proceeds. It says it is 50,000. Okay, it is 50,000. Now what is the tax rate applicable? It is 50%. Now tax rate applicable is, tax is 50%. Okay, the tax rate which is applicable is 50%. Now 50 divided by 50%, you need to convert this, right? 50 divided by 100 will give you, so 50 divided by 100 will give you 0.5. Okay, now let's substitute this into a formula. That is I is 4,000 divided by NP. NP we found out it is 50,000 into 1 minus T. 1 minus T, that is 0.5. Okay, 4,000 divided by 50,000 is 0.08 into 1 minus 0.5. 1 minus 0.5 is 0.5. Okay, now 0.08 into 0.5 will give you 0.04. Okay, 0.04, or into 100 will give you 4%, or 4%. This is how you find out the KDA. I hope it's clear to you all. Just substitute in the formula and find out the solution to the formula. Okay.